Hey folks, and welcome to this Pipnotic Symposium on the 19th of September 2022. Today we're just going to have a look at a couple of things. I'd like to take the opportunity to run through the boxing exercise as well, because I think it's really awesome and quite powerful. And so let's just do that. We had this trade up here, which we didn't get filled on. We missed it. We had the parent, the child tested it, and we just reacted somewhere in the child, so we didn't get filled on that, so that left with us, which is a blow. And we had something else on, I think it was the Euro franc, where we had a position to buy down here, and we didn't get filled. We missed it by just a handful of pips, so that was unfortunate, but that happens actually a lot, and it's super frustrating, but you just have to deal with that, I suppose. Take some Valium or go for a walk or do some press-ups or whatever, but that happens a lot. I mean, look at this one here, we missed it. This one filled, which is quite nice. This one filled, which is quite nice, but they don't always fill. Sometimes you get close and you lose it and you miss it. I mean, this one, it got to it, and then we kind of went a bit further, and then we moved. But a lot of the time you get really close, and the spread either keeps you out or something else happens. This one here as well, if you would have had your entry there, you wouldn't have got in. This one here filled, went right through it. This one here almost went to it. I don't even know if that went to it. This one went right to the other side. Okay, this one, you missed it. You see, this one went through it 2 times. This one was perfect. This one just got tore through. This one, the same. And so that happens a lot. And so you have to maybe incorporate the spread sometimes, because that is something that'll keep you out of these trades, which is quite frustrating. So in a situation like that, you just have to, kind of deal with it, which it's just life. But let's have a look at the boxing technique. I don't know. Let's have a look at the dollar CAD. It doesn't really matter. Just something that's moving higher. Okay, and so this one here, we have what we want to do. Something is quite important. If you have something that has been kind of tested and failed, tested, failed, and then price finally goes through it, I mean, that gives a little bit of credit to the price structure, the origin of the move that was strong enough to trade above these highs. You can see they've both been removed. And so what you would do in a situation like that is you would look at the swing that moved through that. Okay, and we can go to the 4-hour chart just so we have a little bit more detail of the move. Excuse me, and you have that just here. Okay, so we can't really do boxing yet because it hasn't turned around. It hasn't turned around, so we can't even do this because it's still going. Okay, but assume that it stopped. We could do this then. Okay, and then you would obviously look at the midpoint. This is equilibrium, so around here. And so you know that this is the sell side, this is the buy side. This is a really good price to sell. You don't want to be selling here, and you don't want to be buying at any of these. You don't want to be buying here. Even though this one worked, you don't want to do that because it's high risk. Okay, so you want to wait until price comes back down to here, below this. Okay, and this also lines up nicely with this, around this 50% price point. And if you like fibs, for whatever reason, I don't use fibs for their ratios, but I use fibs because it's just a really nice tool to help you kind of highlight these price points. And have you seen me draw loads of times before? Let's just do it like this. You have the buy side and the sell side. Here we have the buy side. And here we have the sell side, and it enables us to identify those higher probability price nodules. So you have, here we have 1. So like buying at a structure up here after price turns around, it's a really bad idea. 2, bad idea. 3, bad idea. 4, bad idea. Bad idea. 5. Okay, now we're talking. Now price is at equilibrium for this move from here to here. Okay, so if price rallies inefficiently, if price is able to come back to 50%, that's half of the move. So that's a reasonable price for this move. And so people who didn't get in here or whatever, if it manages to come back here, then maybe they'll be a little bit more interested in buying at this price point here. And fibs is just a really cool tool. And so I've actually set mine up. I'll show you. Well, I've just put it here. Just 5, 6, 7, 8. This is just like 0.5, 6, 7, 8. And then I have 1 and 0. So you can see kind of the tops and the bottoms. Now I just put it on the swing once price turns around. Then I just wait. And I know that, okay, I'm not going to do anything until price comes at least below here. And sometimes it does this. Sometimes it comes to this area here and you don't get the trade. But again, that's the way it is. As they say in Russia, tough shitsky. That's just the way it is. Sometimes you don't get those, and that's fine. But you know that a move from here is less likely to continue as long as a move into a deep retracement where we have a more attractive price, because there's going to be heavier buying down here than there is going to be down here. And that's because if you look at like the order book, like so, and this is equilibrium, this is like equilibrium, there is, just do liquidity like this. Okay, so there's selling up here, and the selling decreases as price comes down, and buying increases as price comes down. So they kind of swap. Okay, so this is kind of like fair value. This is discount price, really good price to buy, and this is a premium price, a really good price to sell. And so buying up here is not a really good idea, even though it works. It's just a really bad idea. And so it's just a good idea to, have these rules. I'm really not gonna buy at a price that's any more expensive than maybe 6, or maybe 7, or maybe 5. And on inefficient moves like this, price often revisits the 5 and then has another run. Okay, but it doesn't always work like that. It's just sometimes, which is kind of useless, which is kind of like the Danish language, I find my wife correcting myself and my 2 boys. We run around, sound like a bunch of farmers from the West Coast, where my wife is from. The other day, my son said, like, in hus, and my wife turned red and she said, it hus. And for the Danes listening, they'll understand that. And so if you don't see something or hear something for a long time, then you kind of forget what it's like. But if you see something a lot, like price patterns, then you pay attention to them more. Okay, so make a rule with your boxing. Okay, am I a 50% trader, or am I a 70 and 80% trader? And that actually makes sense, because if you're buying from the 50%, you'll maybe have 50% wins and losses. If you buy from the 60%, you'll maybe have 60% wins over losses, and so on and so forth as price comes down, because the likelihood of price moving higher is greater the cheaper price comes. Okay, good. Well, I'm going to leave it at that. I'm not going to ramble on too much longer. I hope this is useful. If so, I'm glad it was. If not, I'll try again another time. If you have any questions, let me know. Thanks so much for watching.